You missed the magnificent 7 and the stock market is climbing without you. No problem, simply put your money in the 7 samurai. Goldman Sachs has identified 7 stocks from Japan that fulfill certain fundamental criteria and are partly responsible for the Nikkei's 225 rise. In this video, I will tell you whether it is a wise decision to invest into these stocks or no. My name is Thorsten Tiet, I'm the founder of Dividend Stocks Cash. We have more than 100,000 members. We are looking for quality stocks to invest in and we want to buy these stocks when they are mostly undervalued. What's important, I don't recommend you to buy or sell any stocks in this video. Please make your own due diligence. Now a head start, I would say we go here into the screener and what I missed right now is making a watch list. But I would tell you these stocks, we have Screen Holdings is another one. We have Tokyo Electron. Tokyo Electron is here. Electron. Yep. We have Advantest is another one. Why do we have Warner Bros. Discovery? It's Disco Coporation, so now he's gone. We have Toyota, I remember, we have Subaru, even if you believe not. We have a lot of Toyotas. We have Toyota with the 7203 symbol. And we have Mitsubishi, a trading company. So, what we are doing right now, I tell you, you get a tutorial about using the screener. 7 samurai, and now, okay, now we pick these stocks 1, 2, 3, 4, 5, 6, and where's the number 7? Where's the number 7? 7. Okay, so here are the 7 samurai. Let's look at the performance, and here you can see that we have some 10 baggers here in this group. 1, 2, 3, 4 10 baggers within 10 years. But then we see here with Subaru, for example, lackluster performance within the last 10 years, performance of only 12%. So maybe I should show you about the 7 samurai. It's a name from Goldman, or it comes from Goldman, and it was a big marketing hit for Goldman Sachs. For example, Bloomberg was writing about it. Here we see Nikkei Asia was also writing about it. It's already here, but also CNBC News, for example. And we have here the 7 samurai, and they are all dividend payers. You see the market capitalization. Toyota is the biggest one, but even with Subaru and Toyota, it's 2 classical car companies. And while we also have Tesla, for example, and being part of the Magnificent 7, Tesla is at least as much a tech company than a car company. And with Subaru and Toyota, we have traditional car companies. And they don't lead in electrification or in digitalization of car. So they are even in defensive mode right now, especially Toyota is a pessimistic stance against electrification. We also have here this trading company, Disco Coporation. You could also ask what they are doing there, and still they have a nice performance, but they're even no 10 bagger if you invested in 15 years with 790% capital gains. They are still no 10 bagger, so they hardly belong there, in my point of view. At least we have here 4 companies which are a little bit more promising, which remind you a little bit maybe on NVIDIA or ASML, even if they are no not part of the Magnificent Seven. We have semiconductor equipment, and here we have Disco Coporation equipment and tools, but they also are linked to the hardware industry. Maybe these stocks, and there are some 10-baggers we have just seen, maybe these stocks are promising investments for you right now. Let's check. When we check, what we do is we take a quick glance at earnings growth. If they are, we want to invest into quality stocks, and we want to know if these companies are able to increase their earnings in a sustainable way, and they also need to have a dynamic earnings growth to give you a nice performance by capital gains. So Disco Coporation changed the layout, and what's interesting here is always the earnings. So let's look at the earnings. As you see, we have had many years of lackluster performance regarding earnings growth. So about 50, 60 years after 2000, not very much. And then here, at least business year 22-23 was a good one with earnings all-time high. But here you see we have a slight decline of earnings, and then, according to analysts, we should rise to new heights. What does it mean regarding valuation? So this is mediocre, I would say, or not really impressive. But it could still be a good investment if the stock is fairly or even undervalued. Let's look at the multiples. No, let's check the performance year to date. It's also interesting here, and this is one of the reasons why Goldman Sachs decided to put this stock onto the list of 7 samurais, close to 50% capital gains within the running year to date. And it's just 2 months and 1 week. So let's go to the multiples chart, and what we can see here is that back in time, for the most part, the price earnings fluctuated around 20. Now we have a price earnings expansion. We can use the reported earnings for all these stocks here. Now we have a price earnings extension, and the current price earnings is close to 77, which is much higher than around 20 in the past. And even if the analyst estimates become true, and we will see this dynamic earnings growth from all-time high to all-time high, and the multiples will go down based on current stock price, but even in 26, beginning of 26, price earnings would still be 37, and which means far above the historic price earnings. In other words, Disco Coporation, for me, no buy. Let's check the next stock. It's Screen Holdings. Screen Holdings at ultimate performance of more than 55% year to date. They are also in the hardware industry. You could see it here, but I don't want to go into a detail. I just want to know if, from a fundamental point of view, these are good investments. Let's talk with the quality check, and here we see a worse history regarding earnings stability compared to Disco Coporation. It's 3 years with losses, and even here in business year 2019, 2020, bad business year with dividend cuts, but now we have all-time highs, and the new all-time high should be already done this year. Let's check the multiples, and what we can see is here it was a year with very low earnings, so this is not representative. We zoom in here, and then you can see that we have here price earnings as low as below 7 even, and highs around 14. And now multiple expansion again, current price earnings around 31. And if earnings grow as estimated, price earnings will go down, but with around 19. And in September 26, it will be still far above the historic price earnings. And this leads to fair value. I didn't do this with Disco Coporation, so we can at the fair value here. We don't only want to know if the stock is over or undervalued, we want to know where's the fair value of the stock, because then we can do some nice things with that. And here is the fair value, and current fair value is around 11,600 Japanese yen compared to 80,440 Japanese yen. And with a downside potential regarding the fair value in spring of 25 of 23%. Our words, this stock is not a buy here, by the way, Disco Coporation. We can do the same, fair value here. Let's zoom in, and here we have under downside loss potential of even 33% for till spring 25. So Disco Coporation and Screen Holdings, they are both not a buy. Let's continue with Tokyo Electron. This company here reminds us a little bit on ASML. Let's check the performance. Around 50% capital gains, like usual here, year to date, quality check. And then we see here even more years with losses. You have 4 years at least with losses. But here we have an all-time high, business year 22-23, but now also declining earnings. And according to analysts, we should reach new earning records starting in 25 and 26. We should go on. Let's check the multiples. So this is not what I would mean a stable earnings growth here. Let's check the multiples, and here we see also price earnings expansion. And even if the earnings will grow as estimated, we would still have in spring 27 price earnings of around 23, which is still above historic average of 17. And now you already know what's going on here. We have an overvalued stock and downward potential here of even 40%. So in our words, Tokyo Electron, not a buy as well. Maybe Advantest would be interesting. And here we have performance of around 45% year to date, quality check. And here we see also lackluster performance for many years, and just in 22-23 as usual new record earnings, but here downward earnings trend, and according to analysts by starting in 26 we should have new heights in earnings. And let's look at the multiples, price earnings expansions. You already guessed it. Here historic average of 21, currently 76. And even if the earnings will grow with around 30, it will be still overvalued in 26, beginning of 26. And here, according to analysts, they estimate that here we will have declining earnings, but this is a glass ball, don't take it too seriously. It also could be mathematical, because here the number of analysts goes down from 4 to 2, and maybe the 2 pessimists remained and the optimists don't estimate for 27 anymore. So let's have a look at the fair value, and then you see here downward potential of 36%. In other words, this stock is not a buy as well. The other 3 stocks, the 2 car companies and Mitsubishi Corporation, I am not going to analyze, because they are not stocks you invest in if you want high capital gains, honestly. Moral of the story: don't get caught up in the financial price and the financial press. The writers are less interested in your performance and attracting your attention. So hands off Japanese stocks in general. I say no. Look at the fundamentals instead. Look yourself for quality stocks, also Japanese quality stocks, because there are actually some reasonably valued quality stocks from Japan, and I'm going to prove it to you right now, still in this video. How can I do it? It's easy. I get rid of the 7 samurai and I filter here for Japanese stocks only, and then I'm just sorting by quality score, and then you have nice stocks here. I will prove you by showing you the quality check. This is strike. You see how sustainable, stable earnings growth look like, and also growing dividends, solid growing dividends look like. So this is business consultant company with focus on merger and acquisition. Then we have, for example, Koei Tecmo Holdings, and you see here nice earnings growth, even abnormal earnings growth here, and then here some normalization issues, but nice earnings growth. This is a company in the gaming industry. They develop games, video games, and look at the balance sheet here. If you compare this to many gaming companies like Electronic Arts or Take-Two, which are overstuffed with goodwill, here we have no. It could be also interesting to analyze. We have M3, I already analyzed the stocks. It's a software company, basically in the healthcare industry, and you see how earnings growth look like. It's also abnormal earnings growth thanks to Corona and now normalization. Or here, next one, you see how it looks nice. It's online trading, like Amazon, something like this. It's the same segment. So you see, there are a lot of good companies, Japanese companies you can invest in. I encourage you to do your own research, but please don't listen on what the financial press is writing, because they are not interested in your well-being. They are interested in your clicks only. Okay, thanks for watching. Have fun searching for quality stocks you can invest in from Japan and all other parts of the world, and see you next video. Bye bye.